The Adani Group, one of India's largest conglomerates, found itself in the midst of a massive controversy in early 2023. This followed a scathing report by Hindenburg Research, a US-based short seller accusing the group of fraudulent practices and stock manipulation. This saga has captivated the nation, sparking debates about corporate governance, regulatory oversight, and the role of short sellers in the market. At the heart of this controversy is Gautam Adani, the founder and chairman of the Adani Group. Once hailed as a visionary entrepreneur and India's richest man, Adani's empire, spanning ports, power, and infrastructure, came under intense scrutiny after the Hindenburg report. The allegations, if true, could have far-reaching consequences for the Adani Group and the Indian economy. The Adani-Hindenburg saga is not just a corporate battle. It has become a topic of national interest. The accusations raised fundamental questions about corporate governance in India. It also highlighted the role of short sellers and their impact on the market. This essay will delve into the details of the Adani-Hindenburg controversy, examining the allegations, the responses, and the potential implications for the Indian market. On January 24, 2023, Hindenburg Research dropped a bombshell report that sent shockwaves through the Indian corporate world. The report accused the Adani Group of engaging in a brazen stock manipulation and accounting fraud schemes spanning decades. These allegations, based on a 2-year investigation, painted a grim picture of the conglomerate's operations. Hindenburg's report alleged that the Adani Group had used a web of offshore shell companies to inflate its stock prices. These companies, based in tax havens, were allegedly controlled by Adani family members and associates. The report also raised concerns about the group's high debt levels and the lack of transparency in its financial dealings. The report's publication triggered a massive sell-off in Adani Group stocks, wiping out billions of dollars in market value. Investors were spooked by the seriousness of the allegations and the potential impact on the conglomerate's future. The Adani Group faced mounting pressure to respond to these accusations and reassure investors. The Adani Group vehemently denied all allegations leveled against it by Hindenburg Research. In a 413-page response, the conglomerate called the report a calculated attack on India and a malicious attempt to damage its reputation. It accused Hindenburg of being a foreign entity with vested interests in shorting its stocks. Adani Group claimed that the report was based on misinformation and outdated data. It defended its corporate governance practices and financial health. The group emphasized its compliance with all applicable laws and regulations. It also highlighted its track record of growth and contribution to the Indian economy. Despite the strong rebuttal, the Hindenburg report had already cast a shadow on the Adani Group. The allegations triggered regulatory scrutiny and investigations in India. The Securities and Exchange Board of India, or SEBI, launched an inquiry into the matter. The controversy also sparked a political debate, with opposition parties demanding a thorough investigation into the allegations. As the Adani-Hindenburg saga unfolded, Kotak Mahindra Bank, one of India's largest private sector lenders, emerged as a key player in the narrative. In a surprising move, Kotak Mahindra Bank decided to limit its exposure to the Adani Group. The bank reportedly set a cap on lending to the conglomerate, raising concerns about the group's financial health. While Kotak Mahindra Bank did not publicly disclose the reasons behind its decision, it was widely seen as a sign of caution in the wake of the Hindenburg report. The bank's move suggested that it was taking the allegations seriously and was concerned about the potential risks associated with lending to the Adani Group. Kotak's decision had significant implications for the Adani Group. It signaled a loss of confidence from a major lender, potentially making it difficult for the conglomerate to raise funds in the future. It also added fuel to the fire, raising further questions about the group's financial stability and its ability to service its debts.